I'm John Kaiser at the Metals Investor Forum in Vancouver, January 23rd, 2026. I am here with Fred Earnest, CEO of Vista Gold. Fred, welcome to Vancouver.
It's great to be here.
So you were here last year. Your stock was about 57 cents. You're, I think, 260 or something today, maybe higher. It's changing so quickly.
280 this morning.
Okay, so it's finally happening. You were undervalued last year with gold at 2,800. Now gold's bumping at 5,000, and I'm using $3,000 as a conservative pullback type of number. And Vista Gold, you now have two feasibility studies out, one for 50,000 tons per day, the other 15,000 tons per day. When I apply my rational speculation model to your ore schedule and the discounted cash flow model, the 15,000 ton per day scenario should be priced $5 to $10. The 50,000 ton per day scenario should be $15 to $25. Yet you're still cheap even for the smaller scale scenario. So when you did that smaller scale feasibility study, the producers were still very leery, or they didn't have a mandate from the institutions, their shareholders, to build ounces. They definitely didn't like billion-dollar capex, and the big guys, they didn't want to deposit that was less than 1 gram per ton. But since July, things have changed. The producers are doing really well. In the conversations that you've had with all these groups, what are they thinking in terms of which scenario would be the better one for you to pursue, and who should pursue it?
You know, that's an interesting question, because over a number of years of talking to people about Mt Todd and visiting with a number of companies that have shown various degrees of interest in the project, we've seen a range of thoughts on how Mt Todd should be developed. Everything ranging from some companies asking the question, can Mt Todd be built bigger than 50,000 tons a day, say 65,000 tons a day, to, on the other end of the spectrum, companies saying, we would never build Mt Todd at 50,000 tons a day, that we would build it at a smaller scale and then expand it. The response that we've received after completing the new feasibility study in July, resizing and maybe even, we might say, right-sizing the project for an initial scale of 15,000 tons per day, has received considerable applause, support from those from shareholders, from those in the know, companies that we're talking to. Everybody feels that that's the right step to get to design the project, size the project so that it can get built, get a year or two of operations under its belt, put all of the naysayers to bed, and then expand the project. And whether that expansion takes place in one big step or two steps, that's going to depend on the market and a lot of factors. But that's the thought and the feeling that we have, is that the important factor is, the project is now scaled at a size where it can be built, and it can be built relatively easily. And we've allowed the space to be able to expand it.
Mm-hmm. Now, Artemis Gold acquired the Blackwater deposit, just sort of low-grade silver gold system from New Gold, and they did this while gold was still bumping around 1,800, 2,000. They did do a staged plan where they had a smaller capex, and then you reinvest the cash flow. And it's now kind of a poster child for, yes, juniors can build their own mine and flourish and become a new producer. But I go back to this other scenario in the 2008 to 2013 cycle. A spin-out from Vista Gold was Allied Nevada with the Highcroft deposit, and they tried to put that into production, and it ended up in bankruptcy. But before that, it went from a couple bucks to $40. So it was really great while gold was going up. I'm of the view that we're undergoing a fundamental reset in the price of gold, the real price of gold, like not with inflation zooming up and destroying everything like it did in that other cycle. Assuming you're not bought out over the next 12 months, is the point where you can actually get serious about, we're going to build it ourselves? And we'll do it maybe in the staged way where we'll keep the 50,000 ton per day, just not right away. What needs to happen for that to become something you actually do?
A couple of weeks ago, we announced that our objectives for this year are to complete all of those activities that will allow us to make the decision to begin detailed engineering and design by the end of this year.
Okay.
In other words, starting detailed engineering design in early 2027. And so the things that we need to get done this year is that we have permits for the 50,000 ton per day project as it was designed in 2018. Since then, we've conducted 3 drilling programs. We've completed the feasibility study. The gold price has gone up. So obviously the pit design is a little different today than it was in 2018. That means the waste rock dump has a slightly different configuration. So we've got to modify permits. And these are all relatively minor modifications. In some instances, we've already filed the applications for modifications, and in others, there's a sequential aspect to it. And so, our plan is to have all of the permits for the present feasibility study plan by the end of the year. We just recently completed some drilling to obtain core for some final metallurgical testing that will provide the data that the engineers need to make final engineering decisions on things like the size of the regrind mills. We were not real happy with the pit slope design, that's particularly on the west side of the pit. The geotechnical engineers flattened that slope in the feasibility study. It added some stripping. We hope that in the coming months we'll start a drilling program to obtain the data, the geotechnical data that we need to be able to redesign the west wall of the pit, and that has some interesting implications. Golder Associates, Colin Nicholas, both previously designed the pits, and we had a 51-degree pit wall on the west. Today it's at 42 degrees. That's a huge change. And so getting it steepened back up to, say, something in the range of 48 to 50 degrees, we have the potential to, either reduce the stripping or potentially make the pit deeper and recover another couple 100,000 ounces of gold. So there's some interesting things there that will also happen this year as we march toward that point, the end of the year, of being able to essentially make an investment decision to build Mt Todd.
Yes, so you'll be quite busy working on stuff, and if no suitor comes knocking, you just build it yourself. Now, I'm still puzzled by the low valuation, and this complaint about Mt Todd keeps coming up. In fact, a former backer from decades ago of Vista Gold, when its mandate was to buy worthless deposits that hopefully might be worth something if gold eventually goes up, he was asked in a podcast about Vista Gold, and his response was something along the line of, "I'm a soft rock type of guy. I'm into Barry Manilow. I'm not into hard rock and the Led Zeppelin types. I'm a soft rock Barry Manilow fan." And I'm like, I'm a Led Zeppelin fan. I don't even know what Barry Manilow sounds like. But this business about hard rock at Mt Todd keeps popping up as this negative. What is this all about? I mean, you've spent 20 years and $100 million doing all these studies on this thing. Why does this keep coming up?
I would tell somebody, if you really like soft rock, why don't you follow the coal industry? Last time I woke up this morning, we still call ourselves the hard rock mining industry. We have the technology. You alluded to the investments that we've made. Mt Todd failed because they picked the wrong equipment. It's not because the equipment failed, but because they picked the wrong equipment, and they sized it and designed it for rock that had a lower bond work index. The hardness of the ore body at Mt Todd is only a little bit harder than what Boddington has. Newmont's operation in the southwest part of Australia. It's again a little bit harder than the Katie operation. It's softer than some of the platinum operations in South Africa. We have a flow sheet. We've selected equipment that's the same as what these other operations are using. And we've spent a lot of time doing the test work. We know that that as of a couple of years, we'd sent more rock to ThyssenKrupp Police's facility in Germany than any other mining company. We've spent the money, we've done the work, we've done the time. I feel very comfortable saying that we have the technology, we understand how our rock is going to behave, and we've selected the equipment that will be able to efficiently crush and grind the Mt Todd ore. And it's not a matter of can we do it. A matter of we've selected the equipment, and where the difference is going to be in our power consumption. We will have a little bit higher power consumption, but at nearly $5,000 gold price, I think that we can afford $50 more an ounce because we have to put more power into grinding the Mt Todd ore.
Yes, so that's the story. Here's this project. All the technical problems have been identified and dealt with in a technical manner, and we have gold at an entirely new price. You did your feasibility study at, I think, 1850.
2,500.
The older one, the
older
50,000.
one was 1850.
Yeah, and you got it to sort of work at that, and it just absolutely flies at 3,000. And when you plug in 5,000, it's insane. So all those people out there who think hard rock is a problem, I think Fred's answered it's not a problem. I've been speaking with Fred Earnest of Vista Gold. Thank you, Fred.
Thank you for having me.